10 minutes, short time frame, so let's get straight into it. We believe we've got a globally significant rare earth find here. It is clay hosted. A lot of the ones that you'll see today and then over the next couple of days will be clay hosted. I won't go into the ionic versus non-ionic and all those type of things, but let's talk about what we've got. We've got grass patch and splinter rock. Splinter rock is our major flagship project. Multiple large-scale prospects identified that we'll talk about. Higher grades, so well above 1,000 ppm. That gives you more revenue than lower grades. 22% magnetic rare earths, as people have mentioned. That's where the money's going to come from. So we need those to be high. And importantly, we've got 10 to 80 metres in thicknesses near surface. So massive scale here. We're receiving averages of 60 to 75% recoveries and up to 90% as well. And these clay basins are covering over 250 square kilometres. Importantly, we're close to Esperance. So for those of you that don't know where Esperance is, it's in southern WA. It's got iron ore going out of it. It's got wheat, barley and a whole heap of other commodities going out of it. So it's a big port. We're located on sealed roads. We're about 20, 30 k's away from a sealed road. And there's also lots of wind power down there as well. We listed it on the IPO back in June last year. We've done lots of things since, lots of drill programs, lots of metallurgy programs and a number of things. So we've had a good run and we're still running at the moment. So let's talk about the airborne electromagnetic survey. So this is one of our most eye-opening factors that we've been able to use. It's a big exploration targeting tool. Our last drill program had 90% successful holes based on using this. So this Technicolor little map on the right-hand side there really is just telling us the green and blue areas are the granites. The granites were the original host material that's been eroded off to clays over hundreds of millions of years. And they've been eroded into the old valleys that you'll see in the yellows and oranges and reds there. So that's what we're looking for. That's what we've targeted, and those areas are big, which we'll come across in a second. I'm not going to touch on the geology here due to time, but again, granite's going into these basins effectively. But if we look at that cross-section that's there from A to B, that's 40 kilometres in length. So that's a big area, a big long area. So let's go into the details a little bit more. 4 main prospects there, each of them well above 1,000 parts per million at either 300 part per million or 750 part per million grade. And that's important, that's what gives you revenue. If you're down around 600, 700, 800, you're going to struggle for your revenue and you can't afford acid, you can't afford other reagents. Magnetic rare earths, that's where the money is. There's not too many people that get above those 20%, but a lot of these clay rare earths, they are getting higher recoveries, so then you're getting a higher revenue mark as well. The clay thickness is important. Why is it important for? If you've got 2 to 10 metres thickness, you've got a big stripping ratio and you're impacting a large area, whereas we've got up to areas of 10 to 80 metres in thickness. And these the lengths and widths that we've identified from these clay basins are multiple kilometres in width and tens of kilometres in length. Massive areas. Thickness to the cover is in between 3 to 35 metres. And metallurgy results I'll touch on shortly. So we're in Sydney. I thought we'd put up a little slide here of how big is the Sydney Harbour for those that don't know in comparison to what we've got there. So the Sydney Harbour from the heads all the way to Parramatta is 55 square kilometres. Lots of water there. That's it shown in blue. The clay basins that we've got shown there and that we've been drilling out are multiple Sydney Harbours, almost a Sydney Harbour each. So what we're now targeting is the best of the best from these results. And tonnes aren't going to be a problem. There's going to be hundreds of millions, if not billions of tonnes out there. So watch out. We're just looking for the best grades, the best metallurgy, and we'll touch on that shortly. So looking at centre. Centre, big thick intersections there, 50 to 70 metre thick, 1,300 to 1,700. And that's a 5 kilometre in width section. Again, just to give you an idea of what we're talking about. Metallurgy, let's talk metallurgy. There's a lot of talk about metallurgy. We're using a hydrochloric acid as the basis for our works. There's a couple of reasons for that. You do get higher recoveries. We get the ionic portion of it, but we also get the readily acid soluble. So we increase our revenue. We've got higher grades. We can afford it. We can use sulfuric acid and we can also use ammonium sulfate as well. Now hydrochloric acid, simply put, is easily produced on site. You take table salt, add water and power, and you get hydrochloric acid, and you also get a base which you can then use to neutralise the hydrochloric acid when you put it all back in to the pit at the end of the day. So we're going to have to wear those costs. We could use sulfuric acid. You produce sulfuric acid by burning sulphur. And then you still need to add a lime to neutralise at the end of the day. And you can use ammonium sulfate, which is a fertiliser. How do you produce the ammonium sulfate? You take sulfuric acid, which I've just told you how to produce, and you also take ammonia, which is produced from a gas plant up north in the Burrup Peninsula. So there's different costs for all these reagents. It really doesn't matter which of those three processes you use, as long as you've got the grade, as long as you get the recoveries, and as long as your revenue is in the right area. And that's what we're chasing. The best areas out of these multiple Sydney harbours that have grades in excess of 1500 ppm, that are getting the recoveries, not just 30 or 40%, which are seen in just purely ionic clays, but getting the 60s, 70s and even higher recoveries. What's next for us? We've got a next round of drilling that's going to start in June. So we've tested the width on these, now we're going to test the length. So 20 odd kilometres in length we're going to test through the centre prospect. That's going to start in June. We'll have that finished by July and results coming out after that. We also got awarded a $180,000 co-funded drilling program from the West Australian Government, which is their flagship exploration incentive scheme. So that's covering part of the cost or half the cost of that program there. So good news flow, that will continue to come out of that. So we're targeting a mineral resource. So this is going to be sizable to start with, and we're going to continue over the next 12 to 24 months to double, triple, and even go higher on those. But what's important in a resource? Grade, as always. Magnetic rare earth, that's where the money's coming from. Thickness, so low stripping ratios, low impact to the environment. And can you actually leach it? Can you actually get it out of solution or out into solution and then treat it from there? And let's talk about capital cost just briefly. I won't say numbers or anything like that because we don't know yet. But all these clay-hosted shows have to have a very similar process. We stick it into a tank, we then take the solution, we then remove the impurities, and then we then put it in the back of into the pit. So the actual physical capital cost to build the tanks is going to be similar across ammonium nitrate, sulfuric acid, or hydrochloric acid. It's going to come down to what your operating cost is. How much are you actually getting out? The more you recover, the higher the revenue, the higher the grade, the higher the revenue. So that's what it's looking for. Corporate structure. We're not a $300 million market cap yet. We're only $30 million, so looking to go up a lot higher based on what we've got and the size of what we've got. We've only got 100 million shares, just over. We're a simple structure. We've got a good mix of retail, a few institutions, directors and management are obviously well and truly in there. We've got geologists in there. I'm a metallurgist and chemist is my background. We've got another one in there. So we understand how this all works. And we've also got a good corporate finance guy and peers on the board as well. So well structured. So back to the highlights. We're near Esperance. We've obviously got rare earths in multiple areas. I didn't touch on the market today because we didn't have time, but demand for rare earths is going to forecast to triple by 2035. What does that mean? We need another 10 to 12 rare earth mines developed in that time. So the reality is, it doesn't matter if you're in Brazil, doesn't matter if you're in Uganda, doesn't matter if you're in Australia, we actually need multiple mines to get up and running, and the industry needs to work together to actually get those areas up and running outside of China and actually new sources coming. We've got a good discovery there, good grades, good metallurgy, good size, and we've got a good skilled board. So thanks for listening, guys. We're looking forward to this rare earth industry really getting off, and there's only one in Australia at the moment, which is Lynas, and we need another 10 to 12 mines.